Hello trader, welcome to SammyBrainFX. So in today's video, we are going to be looking at something very important. So as a trader, there's a kind of trade that you will just spot out and it will sort you out for the whole month. Like if you can spot this kind of trade, you will be set to you will be okay for that whole month. You understand? So those are the kind of trade we look at for, and that's the same thing that I've been doing, and then I ensure that I use the same strategy. Okay, so the same strategy, the same entry model, exactly the same thing. Okay, so you should have a particular trading pattern and then you stick to it. So if you can spot this kind of trade, it will just settle you for the whole month. Okay, all right. So now looking at the chart before us, we have a volatility 10 V10 index. So this is 4 hours time frame. So let's go to our 1 hour time frame. Now coming down to our not our daily time frame, rather. Now looking at the daily time frame, we see what has been happening so far. Okay, we see price has been on a downtrend. Okay, making a series of lower high, lower high, lower low, lower high, and then we got a break of structure here to the downside, and price created a new low, and then of course it did all this. It cleared liquidity to the upside, and then price came in, it went up, and there was another break of structure here to the downside, and there was a retracement, another break of structure to the downside. Okay, and then now, so price has been on a downtrend rather. So if you had to have something like draw a trend line like this, you discover that price has been going down. Price has been going down lately. We have been having price going down, so price has been on the downtrend. So what did we do? So looking at this price, how price has been moving, this is our daily time frame. So now coming down to our 4 hours time frame. Now for our 4 hours time frame, I've been following this trade closely. Okay, I've been following this market closely. If you look here, these were some trades we took. I sold here, and then of course here I sold here as well, and then I bought here, and then there was no entry here. So now we saw that on the 4 hours time frame there is this order block line here. There's this order block here in a 4 hours time frame. You can see this order block right here in the 4 hours time frame. So we have this order block that lies here. So we waited. Actually, I was waiting for price to come in and then retrace to this order block before it goes on to sell. But I waited and I didn't see that happen, so that did not happen. That means this is a very key zone. Okay, because looking at what has been happening lately, yeah, we see all this zone. I sold using our exact same strategy. Okay, so but I was waiting for price to get into this particular zone. All right, so I waited patiently. So now what happened? So price came in, it retraced, it didn't get to our zone, it broke structure to the downside. So we have this break of structure here to the downside. So there was this break of structure to the downside, which of course here becomes another key zone. You get? So now price broke structure, it sold, it went on and sold, it went on and sold, broke another structure to the downside and sold. Now coming down to this particular area, price sold, and then price got to this place, it cleared this liquidity, it took out this previous low. So price in taking out this previous low, it broke structure to the upside. Now it broke structure to the upside. Yet again, this is another key zone, very, very important zone. I waited for price. I actually waited for price to retrace to this zone to buy. Price did not do that. Okay, rather it came in, it did this retracement, it didn't get to our order block, it went on to buy. But you see now, price having gone up, we see all this pattern here. These are liquidity which I expected that in the future price is going to come down to take out all this liquidity. Remember, this was the zone we were targeting in the 4 hours time frame, which price did not get to yet. And then this is another key zone that broke structure. Okay, this zone broke structure to the downside and keeps selling. So this is a very, very important zone that we are to look at for. Okay, so now I waited for this zone and this zone. Remember, this is the first one we're eyeing. Okay, this was the zone we're eyeing at first, and then we also have this other zone right here. So now coming down to our 1 hour time frame. Now let's see, we are looking at this one first before we look at this one. So coming down to this this particular zone, let's go to our 1 hour. I actually start from of course look at what is happening on the daily time frame, and then I'll go down to our 4 hours time frame, and then okay, look at for our order block, and then our an order block, of course, either whether the price is bullish or is bearish. Okay, so of course we trade following the trend. Okay, so it's a top down analysis. So after 4 hours, the next thing I'm going to do is I'll go to either 2 hours to see if I can refine that zone, and then lastly the 1 hour to refine our zone. So there I'll look at for the order block there, and then we'll look at for entry at that particular order block. Do you understand? So now this is the first order block we saw in the 4 hours time frame. We were waiting for this, and then we saw another one here in the 4 hours time frame. We're also waiting for this. So these two zones, we're waiting for these two zones. So now coming down to our 2 hours time frame in refining our zone. So coming down to our 2 hours time frame. So for this particular zone, now for this particular zone, there was nothing to refine here in our 2 hours time frame. So that zone still remained the same zone, nothing to refine. So but coming down to 1 hour time frame. So in coming down to our 1 hour time frame, we'll come to that zone. We'll see that this zone could be refined to this particular points here. So we can actually take out this one now because we have a more refined order block right here. So we're actually waiting for price to get here before we look at for a sale. So now, but this particular zone was a failed trade. It happens, guys. So whenever you're placing a trade, okay, whenever you click the buy or sell button, you should have this at the back of your mind that this trade is either going to be a winning trade or a losing trade. Okay, that's why we have stop loss. If the price goes against you, your stop loss is going to, of course, it will be triggered, and then you'll be out of the market, and then of course you'll be having a little loss. Okay, that's why we trade. We have risk management. Okay, you trade. We consider a risk to reward ratio. So you know how much I'm willing to risk, and then how much profit I'm going to make if the price goes my direction. You get. So now this particular trade was actually a failed trade. I waited for this trade, following our strategy, but it was a failed trade. Okay, so this happened. It do happen. Okay, that's very, very important. You should know that as a trader. So now we waited for price. So this was our zone we mark. We have refined this zone now to our 1 hour time frame. This is the order block here. So we refine this zone. So we're waiting for price to enter this zone, and then it gives us an entry. So we see that price came in. Okay, it cleared liquidity. It took out this previous high. It tapped into our zone perfectly. It tapped into our zone perfectly. Okay, so price tapped into our zone perfectly, and then coming down into a lower time frame. Let's say now for our entry model, it could be on the 15 minutes, 10 minutes, 5 minutes. Okay, depending. So let's go to let me just use 10 minutes. Now coming down to 10 minute time frame for an entry in that particular zone. So what did we see there? So this is a 10-minute time frame. So price did it. It was so clear. So this was where the liquidity was taken. Okay, this previous high was taken, and then price tapped into our zone. Now, price in tapping into our zone. Okay, we actually waited for an entry here. Okay, so here in our entry model, we have this break of structure. Okay, the same thing we saw in the higher time frame. That's the same thing we are looking for in lower time frame. So for our entry model, now this is always our entry model. Okay, our entry model is usually where we have we always have wait for a break of structure. Now this is a sell model, a sell entry model, wait for a break of structure, and then retracement to the zone that caused the break of structure, and then we take our entry. So this is how it's what we usually wait for when we are taking a trade. So this is our entry model. Okay, we're always looking at for something like this where we'll have a break of structure, and then price retrace to the zone that caused the break of structure, and then we took our entry. This is our entry model on the lower time frame after spotting out our order block on the higher time frame. Okay, so now this is our entry model. So that's exactly what we saw here. So price tapped into our order block. It broke structure to the downside. So this is the zone we're actually targeting for a sale. So you saw what happened here. So price came in, tapped into our zone. Instead of going down, it took us out. It violated this particular zone. So let's go back to our 1 hour time frame. So coming back to our 1 hour time frame, let me take this out. Okay, these are entry models. Okay, so now coming down to our 1 hour time frame, so this is what happened. So price violated this particular zone. It violated this zone. So it actually went back to our more extreme zone. Remember, we spotted out this zone in the 4 hours time frame. So let's go back to the 4 hour time frame. So the 4 hours time frame. So this is that order block that we actually eyeing. We're actually looking at for. Okay. So now in refining this particular order block, let's go to our 1 hour time frame. Now, so coming down to our 1 hour time frame, so we further refine this order block here to this point. So this is the order block in the 1 hour time frame. So this is how what it looks like. Okay, so we refine this order block. So now price violated this particular zone. Okay, it took out this particular zone, acted as inducement. It took out this zone, it took out this one, then it tapped into that other block that we were waiting for at the first instance. So yeah, after we have spotted out our order block and we have refined our order block. So the next thing we did, we waited for price to tap into that zone, and then we look at for our entry model. Okay, so we waited patiently for price to get to our So we waited patiently for price to get into our zone. Oh, let me take this out. Excuse me. So we waited patiently for price to get into our zone. So price got into our zone on the 1 hour time frame. Yeah, this is our other block that we spotted. So price got into our zone. So the next thing is to look out for our entry criteria. Okay, very, very important. So we look out for our entry criteria on the lower time frame. So it could be on the 15-minute time frame, the 10-minute time frame, or the 5-minute time frame. So this is our entry model. Of course, sell model. So we have this break of structure to the downside, and then retracement to the zone that caused the break of structure, and then we take our entry. So we waited for price to get into our zone. So price got into our zone. So now let's go to a lower time frame. Let's see how we got this entry. So let's check the 15 minutes time frame first. For the 15-minute time frame. For the 15 minutes time frame, we are it is not very clear because we always want to wait for a break of structure. Okay, so let's go to 10 minutes time frame. It will be clearer in the 10 minutes or in the 5-minute time frame. Okay, so for the 10 minutes time frame, it is clear. Okay, it is clear, but it will be much more clearer in 5-minute time frame. So always watch out for your model. So for the 5-minute time frame, so this is what we saw. So price came in, and we have this okay, let me start here. We have this high retracement, we have this retracement, and then we got into this zone. So price got into our zone, and then we saw that there was a break of structure to the downside. So price broke structure, it broke this low, and then there was a retracement, another break to the downside. Now this is that zone that caused that break of structure. So we're actually waiting now for price to tap into this zone to sell. Are you getting? So that is the same model we use. So this is our model where we get to our zone, where we have our order block in the higher time frame, and then we'll wait for a break of structure and then retracement before we take our entry. So that's the same thing we have seen here, where price got into our zone and then it broke structure to the downside. It didn't just break structure, it retraced again and still broke another structure. But we would have, after this break of structure, had it been price got into this zone, would have sold. So but price broke structure, you see retraced, broke another structure, and then it finally got into our zone, and then we took our sell. So you see how it was so clean and clear. So this is that little order block in the 5-minute time frame. Okay, that order block is not showing clearly in the 5-minute time. Okay, for the 5-minute time frame, we would have gotten that order block here, this particular way, because here we have imbalance. Okay, we have this break of structure to the downside. Let me zoom it so that you see it clearly. So we have price got here, it broke structure to the downside, and we have this zone that caused the break of structure. Then we have imbalance there, very, very important. We always have an imbalance, and then price retraces to that zone and then sold. Are you seeing it? So now let me take this out. So what was this one? Let me take this out. So now this would have been an entry, which is at this particular zone, this zone, and then our other block would have been above. Of course, our other block was above, and don't make it to be too close, so it should be a little bit above that particular zone. So we waited for price. So price came in and tapped into our zone. It sold massively, coming down to our 1 hour time frame. Okay, so for our 1 hour time frame, so you see this, where would have been our exit points. Okay, this was amazing trade. So let's check for exit points. This would have been our first take profits. Like you see, actually exited the trade there. But this kind of trade is a kind of trade that you just hold on to, because you have you have seen everything from a higher time frame, which was the daily time frame. Okay, I exited the trade here and then I entered again actually. So we saw that price sold massively, like the risk to reward is crazy. But I didn't hold up to this point. I actually got out the trade here and then I waited for this retracement and I got in again and so on. Imagine this kind of trade. This would have been so maths. Imagine 1 is to 35.9. That's crazy. Like that is crazy. So this is the kind of trade you look at for as a trader, where you make crazy profit. But remember, stick to your rules, follow your strategy. So that's the same thing we have been doing. And then also there would have been another entry. Let's say you missed the trade here, you would have gotten another entry following our exact strategy. Now this is a 1 hour time frame. So we saw actually what happened here. Price actually reacted here in the 2 hours order block. So there was an order block, there was a break of structure here to the downside, and then price just came in, it sold. It did not give us any confirmation. There was no confirmation here. Okay, and so price got here and then it sold. But there's also something very important here. There was another entry right here. There was another entry here. Okay, so price sold, it retraced, and then it broke another structure here to the downside. So when price broke this structure to the downside, this is another zone. I can refine this zone to our 1 hour time frame. So if we refine this zone further, this is the order block, the 1 hour time frame. So we have this order block. So there was a break of structure to the downside. So we have this zone. So the same pattern, the exact same pattern. We do not change our rules. We stick to our rule, we stick to our strategy. So the exact same pattern. So price broke structure to the downside and then it got into our zone. So the next thing we did is to wait for our entry. So look out for our entry criteria. So now our entry is usually on the 15 minutes, 10 minutes or 5 minutes time frame. So price got into our zone. So let's look out for our entry. Let's go to our 15-minute time frame. Okay, so for our 15-minute time frame, okay, this is not very clear though. It's clear, but not that clear. So the moment price gets into your zone, okay, what I usually do is that I start looking out for entry on the 5-minute time frame first. Okay, I wait for it on the 5-minute time frame. If it is not clear, I can check out my 10-minute or 15-minute, but usually I start from the 5 minutes time frame to look out for my entry. So we saw what happened here. So price came in, tap into our zone, and then this low. Let me do that again. Let me take this out. So we have this high retracement. And then okay, so we got this was similarly retracement. Okay, yes, so this is a particular low. So price came in, it took out that low, there's a little bit of just a little retracement here. Price took out this low, and then so we saw all this. Now this is the zone that started that break of structure. We saw this break of structure, and this is the zone that caused the break of structure. So this is here where we waited for our entry. Okay, remember our entry model. This is it, the exact same model we use. Okay, where we have our break of structure and then retracement to the zone that caused the break of structure before we sell, for a sell model. Okay, so that's the exact same thing we waited for here. So but this is our 10 minutes. Okay, let me go to our 5 minutes. So we have seen that entry there clearly on the 10 minutes. Let me check the 5 minutes if we would have still gotten an entry. So coming down to the 5 minute time frame, we see clearly, of course, there was also that same entry, because the moment price got here, it retraced, it it broke this structure, it formed a high. After this high was formed, we saw this low was now taken out, and then it did this, and then price tap into that zone, and then it sold. Our exact same pattern. So that's the same model we always look out for. So now let's have this. So we waited for price to come in there. So this is our sell, our shorts, and then our stop loss would have been above this high. You see, if you make your stop loss to be too close, it would have taken you out. So a little bit above this previous side, but let it not be too tight. So that's exactly what we saw here. Let's go to our 1 hour time frame to look out for our exit. So now for our 1 hour time frame, so our safest exit point would have just been this particular zone. That would be the safest exit. But you see, very important. That's why you need to map your chart. You follow your trade. Just follow what price is doing. Okay, follow what price is doing. Very important. If I come back to our 4 hours time frame, you discover that I told you that when price got to this place, it took out this low, it cleared liquidity, it did this, it broke structure to the upside here. Remember, these are 4 hours time frame. So price broke structure to the upside. This is that order block that caused the break of structure. So for the 4 hours time frame, we have this particular order block right here. So this is telling us that this is a very significant zone that we should be looking at for. Hope you're following. So now, in refining this zone to our, so we see that when price came in, it broke structure. We expected price to tap into this zone. It never tapped it. So price retraced and then it went up. Meaning this place in the future will be acting as an inducement. Okay? An inducement. And then this is the zone we're actually targeting. So now let's go to our 1 hour time frame to refine that zone further. So in coming down to our 1 hour time frame, so this is what we saw. So we're able to refine this zone. So let me take this out. That 4 hours order block, we're able to refine it down to this 1 hour order block. Are you seeing it? So now that is the exact place that price reacted when price got here. So now this particular zone acted as an inducement. So price came in and tapped into the zone, the long awaited zone. That's why you need to map your chart and just follow it, see how price moves. Okay, you can stick to a particular instrument, 1 or 2, 3 instruments, and then you follow it closely. If you do that, seriously, you are going to be profitable. Okay, you don't have to take too much trade. You don't have to stack positions, 4, 5, 6, 7, 8 trade. 1 or 2 position, 2 at most 3 position is okay. But when you enter the first position, you should ensure you see that price is going your direction before you enter your second position. And then entering that second position, let it be at a logical zone, not just any place you feel like entering. Okay, so now price got into that hour zone. So the moment price tapped into our zone, this low was taken, acted as an inducement. Price tapped into our order block. We waited for our entry criteria here on the lower time frame. So let's start from a 5-minute time frame. Actually start looking at for entry criteria in the 5-minute time frame. So we saw that, so what happened here. Okay, now for the 5-minute time frame, we saw that after price tap into a zone, there was a break of structure to the upside, and then there is this little zone right here. We are having this imbalance. There's this small order block here. But if we go to our 10-minute time frame, that's why we look at the different time frame for your entry criteria. Okay, for the 10-minute time frame, we still have that small zone right there, that small order block. If we're waiting for this small order block here on the 5 minutes or 10 minutes, we would have missed this trade. That's why it's always good to look out for the 5 minutes for entry, the 10 minutes or the 15 minutes, depending on what you see price do. Okay, all right, so now let's go to our 15-minute time frame. So now let me take this out. So now for our 15-minute time frame, we saw what price did here. Let me take this one out first. So price came in, it broke this structure. So price came in, it broke this structure to the upside. So where is the zone that caused the break of structure? This particular order block right here caused that break of structure. So now I usually select that zone entirely. I don't just streamline this to just this little order block, because all this particular zone, it's of interest. So I prefer to mark it like this. But of course, starting from where we have that order block, and then we have that imbalance. Okay, so we saw this clearly on the 15-minute time frame. So this is where we got our entry. So this was a clear buy position. So entry was here, stop loss was below this. Remember, this is that order block where it stops, where the wick of that order block stop. But I usually consider this whole zone. Okay, so this was the stop loss, and then this was the entry. And so our first exit would have been this previous swing high on the 1 hour time frame, or targeting this particular demand and supply zone we're having here. But as you can see, that's why you watch what price is doing, and then to know whether you're to hold on to your trade or you are to exit. Okay, so I entered the trade, and then it's been going up, 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 up. Now this is following our exact same strategy. You're not trying out everything. The problem is not different strategy, not the strategy. Whatever strategy you have mastered, you understand it. Try it on a particular instrument or a particular pair and stick to it. Trust me, you're going to be profitable as a trader. I hope this helps. Till we meet in our next video. Bye for now.